Good morning, traders. It's Wednesday, March 28th. Taking a look at the charts, we got the SP 500 30-minute chart here on the left, which is our trend analysis, which means the colors of the bars indicate the overall short-term trend of the market. And the right-hand side here is the daily chart of the SP 500 futures. Now, yesterday morning in pre-market video, we talked about how yesterday's pop in price was very much so set up to be something similar to this, where you get a pop in price, it rallies up, gets slammed down, and we could go back and do a double bottom test. And yesterday we saw that the market ran up in the morning and then reversed and sold down in a pretty big way. And we're potentially going back down. We pretty much came down to a double bottom there yesterday. You can see here on the price chart over here, pretty much down to a double bottom. Pretty big waterfall sell-off. We did see by the end of the day, we saw some panic selling in the market, and the fact that we are oversold on a short-term basis and that support kind of bodes well for a little bit of a bounce, and it did. It ended up bouncing and closing a little higher, and the market faded a little bit higher in overnight trading, but it's starting to sell off now with the NASDAQ dropping about it was up 0.5% a few minutes ago. Now it's down 0.6%. So more or less the Nasdaq's dropped 1% in price swing here in the last hour or so. So selling is picking back up, and you can see here from our cycles, we've got potential, more or less the market, the 5-day moving average, which is this blue line, our overbought indicator that took place right at the close the previous session before this market topped out. And we got a cycle high. All those things lined up for a pretty nice pullback, which is why we got long the Yang, which is an inverse China fund. If the tariff thing starts to pick up speed, we're going to see China be a lot more under pressure. But more or less, we've got downward cycles still in play here for more or less the session. So we could see the markets continue to sell down. We could see a pretty big flush. If we look on the daily chart, we still have these lows way down here for a true double bottom. And if you take this pattern here and you kind of consolidate it, if we were to actually throw a Fibonacci extension, we could get a much more accurate target here. So if we go from this recent high down to this low and then to the rally point yesterday and bring it forward, that gives us a target where we could see the market go. So it sold down, it rallied up, and the continuation move will be down here at this low. That's a 618, which if it bounces at that level or holds that level for a little bit, then usually means we're going to see the 100% measured move come down, and that will pretty much put us at this major double bottom here in the market. It'd be a measured move. Probably see the VIX spike extremely high. We'd see everything kind of go, and then we could set the market could be set up for a very strong rally after that. So this is kind of what we called. We called back right over here on this big reversal day. We more or less called the March 15th top. Happened on the 13th. Give or take a couple days, we're not dead on, but pretty much nailed that move. And here we are going into this potential double bottom and potential big rally for maybe what could be the final rally of the bull market after this this shakeout here. So let's just go and jump back to a couple other charts. Let's take a look over at the chart of bonds. Here are the chart of bonds picking up speed. Has been putting in this little basing formation. Actually, it was a continuation pattern until it started to break out here yesterday and today. We're starting to see the front month contract of the bonds kind of breaking out, moving higher. If we actually look at the TLT, which uses further forward contracts, they're actually showing more bullish signs. It's moving up more in terms of percentage basis. So we are seeing money start to rotate into the bonds as a little bit of a safe haven place. Money is getting scared and moving into those areas. And utilities as well. We've been talking about for a while how the market has really crashed here again, and we really haven't seen a whole lot. We've actually seen money moving into utilities, which is what we've talked about for a while. More or less this type of pattern here where the market kind of flushes down and rallies back up, and it's holding tight in here. This is more or less a large cup and handle formation. And there's a good potential for a pop and a breakout and for money to flow into utilities. And we've seen this happen before where utilities are out of favor while the stock market rallies. And then when things start to get a little spooky and investors get a little nervous about what's going on, we tend to see utilities start to pick up speed and actually rally and kind of go against the rest of the market. And it usually does it in a pretty stealth way. You don't really realize utilities are climbing while the rest of the market is doing really a whole lot of nothing. Looking over at the safe havens, gold, obviously a strong dollar yesterday, and with gold trading up near resistance, we continue to see money move out of gold. It's been fading back down. Overall, gold, very strong pattern here. Big, strong rally, large consolidation. Price keeps popping and up into resistance. It just has yet to break out. And it's the same with gold miners. They are trading up near short-term resistance, moving lower. Going to trade lower again today, but again, they're still trading sideways more or less for the last month and change here. So we're letting the market continue to digest, and I think a lot of it's going to come down to what is the US dollar going to do. And if we look here at the UUP, you can see here more or less we've got this downtrend, and price, we've got a little support level across here, and more or less the dollar broke below it. It's bounced back up yesterday to trade there. We'll see where it's trading in pre-market. It looks like the dollar is up again today, but overall, hopefully this is starting to lose momentum. If you were to just draw an average line through this price action, it's starting more or less to kind of curve down. And if this starts to more or less break down here, we could start to see a big slide, and that will really send the precious metals, I think, to break out and to go quite a bit higher. Looking over at silver real quick, silver, same type of thing. It keeps popping up into short-term resistance and selling down. Again, still holding up overall. And if we look over at energies, natural gas had a nice pop there yesterday. And I talked about it in pre-market that when the equities market sells off, we tend to find money rotate into natural gas. Not sure why, but it happens more often than not. When there's fear creeping into the market, we need to see the VIX up and panic selling. We usually see the natural gas move up, but overall had a short-term pop and break out of this small to falling trend line, and a little bit of resistance there today. It's pushed higher and moving back, selling off a bit, but overall it's trying to put in a bottom here for natural gas. Looking at crude oil, down 0.7%, trading up near resistance, up at the 66 level, kind of fading back down, which is to be expected once it hits resistance. Usually you see some type of pullback consolidation. The grand scheme of things for the US dollar, or sorry, for crude oil, let's go to the weekly chart and zoom way out here. You can see more or less how we're trading through this level. More or less, crude oil has kind of broken out of this base. It's actually making higher highs, higher lows in a significant way. It's trading at short-term resistance, but more or less it has broken out. And really the last kind of, I think, pop and rally above the 66, we could really start to see things pop into the mid 70s, potentially into the 80s. Now there's going to be a key level here, right where the market kind of held tight for a few weeks. It held tight for 1, 2, 3, 4 weeks. It traded in this range right across here before crude oil's bottom fell out and we saw it just go into free fall mode. So this would be the next resistance, major resistance area, next upside target for crude oil, which is around the $78, $77 per barrel. And that would send energy stocks likely sharply higher. If we take a look at the XLE, it's been trading, it got clobbered real hard here, trading in this what looks to be kind of a bearish formation. In the grand scheme of things, the commodities across the board are trading in this major basing formation. And if you look at the energy stocks, they've been trading down and in this basing formation on their way up. But on a short-term basis, we've got this pattern. Now, this is the weekly chart. So we got a multi-week basing formation. The longer something bases, the bigger the move. You can see the last basing formation here. The range slowly kind of widened, but eventually it broke, and we saw that continuation pattern. So price rallied, consolidated for multiple months here, and then broke and ran really strong for a month. And that's where we're at. Big move to the downside. It's consolidating. This technically could be very much so a bearish formation, but whichever way this breaks, we're going to see a very strong run. Probably going to see a run equal to this distance here. Whatever the free fall was is what we could see it move back to the upside, or it could go all the way back down and test these lows over here. So big move brewing in the XLE, the energy sector. If commodities break out and start to rally, this is going back up and probably beyond for a final huge rally into the end of the bull market for equities as commodities start to outperform. Let's just take a look. Bitcoin real quick, down 5% yesterday. This is the weekly chart, gives you a good view of where we are. More or less big rally, consolidation, and it's continuing to kind of fade down. This is the type of price action that I like to see. I like to see a controlled kind of fade and kind of falls out of favor. And ideally, maybe break this low over here, and we see it just kind of fade out a little bit more, which would bring it right into critical longer term support zone. And if we get some cycle lows there, we could start to see a pickup, potentially put in a double top, or who knows, rocket higher. It's hard to tell what these digital currencies are going to do, but overall, it's in digestion mode, consolidation mode, and it's still in a very strong long-term bull market going forward here. Anyways, last but not least, let's just take a look at the VIX. Here is the VIX. This is the weekly chart, and you can see we had a big pop last week in the VIX. It's kind of consolidating. The question is, do we have this washout low here today or tomorrow in the markets? And do we see the VIX have another one of these giant upper wicks where it spikes up with fear and then comes back down and fades lower? And if we go to the daily chart, you can get a little better view of where it's at here. More or less, it's working its way up. There's a lot of fear creeping into this market, and we're waiting for that washout low where we see a big spike. And that's ideally what we're looking for a significant low in the equities market. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.